Jax, your music's not coming through. You can get started. Sorry.
Okay, so then you'll have to play on your side.
Are we live? Just run, go with it. Sorry.
Okay. Hello, everybody. Welcome to the BizNews Finance Friday webinar. I'm Jackie Cameron for BizNews. With me today, we've got one of our most popular guests, Dawn Ridler of Karenga Wealth Ecology in Johannesburg. And we're also expecting a few other guests to join us shortly. So welcome, Dawn. Just before we get started on the topic, which is cryptocurrencies, let's just hear a little bit about Dawn and her approach to investing. Dawn, you've got this background in the biological world and plants. Can you just tell us a bit about how you approach the world of investing?
You know, I find that investing and financial advice, can be highly complicated for the average person who isn't in this field. And so I found that if I use analogies that they're more comfortable with, you know, things that they see in the game parks or things they see on TV when it comes to wildlife or even in their garden, that I get a level of understanding quicker, which is why, yes, my original degree is in plant physiology, which is actually plant biochemistry. But I like to use the sort of ecological analogies to explain complicated financial aspects like Bitcoin and various other investment things.
Great. Well, it's very nice to have you with us. And for many of our regulars, you'll see that Dawn has a story on the website, the biznews.com website, which is doing very well at the moment, where she's looking at how you can harvest your assets when you have retired. So I really recommend that you go and have a look at that article if you want to make the most of your money. So Dawn, perhaps we could just start with sketching out a little bit on, let's start with what are cryptocurrencies? And let's also just share with our attendees that you have actually been involved in investigating this field for a long time, and you've actually put some of your clients in cryptocurrency investments.
Yes, you know, this is a long journey, and as I was saying to you before we came on, I've actually put a series of blogs together to try and explain what is a long topic. It's not something that we can cover in an hour if people are interested in it. And there's a lot of misunderstanding and fear and quite frankly nonsense that is spoken about Bitcoin out there. But basically, it's an alternative. It's an alternative to fiat currency that we're used to dealing with, and it's based on what's called blockchain technology, which is quite frankly an absolute innovation in of itself. Let alone with cryptocurrencies and crypto assets and all of those kind of, you know, when you start getting into the weeds of the different, what is a crypto coin, what's a crypto asset, why they're different, how they're different, you know, how they mined and all of these kind of things. When it comes to just the average Joe in the street, this is a different way for him for either one of two things: either storing value by investing, or for using for transactions in a much quicker way that sort of basically cuts out all the middlemen.
Thank you. And just before we carry on here, I just want to check with my colleagues in the Johannesburg studio, Dudu and Stuart. Some of the attendees have said that they can't hear. Could we just have a little check to make sure the attendees can now hear the webinar? Stuart?
It's generally an internet connection, but if people can't, if there are people who can hear it, if they give us a half up, we do know it's going through. So if people can click on the control panel on the right-hand side, there's a little half up button. You can just give us a half up so that we do know the audio is coming through, because it should be coming through. It just depends on, there we go, we've got some coming through, Jax. So it is all good to go. I see all.
Okay, great. Thank you, and thank you for confirming that. So, Dawn, we've had a huge number of questions coming through on cryptocurrencies, and perhaps we could start with the basics before we go into the details of how you should diversify and what sensible ways are to invest in crypto. What exactly is a cryptocurrency?
I suppose in those simplistic terms, it's a program, right? It's a program that was invented, I suppose you could say, a good few years ago. haven't got, I do know the exact date. I haven't got it on the top of my head, but it was, and Bitcoin was the first use of this blockchain technology, basically, at the end of the day. After that, the blockchain technology is expanded to a whole lot of other areas, but to all intents and purposes, it's a program. There are some crucial aspects to this, behind every currency. I mean, look at Zimbabwe. Nobody trusts the Zim dollar, right? But they trust the American dollar, and they trust the rand a little bit, this kind of thing. And cryptocurrencies are no different. There's this element of trust that people have to start engaging with. That you can trust that if you make a transaction with this currency, that the transaction will go through, that if you store value in it over a long period of time, because this is a long-term asset. I know there's a lot of speculation and that kind of thing. I mean, it's dropped from, up in the high 60s down to, and it's dropping even further today. It's a highly volatile asset, but it does have its place, and it is getting, in my opinion, getting to a stage where it's at a critical mass, where you're starting to get mass adoption. We're starting to get the big investment firms starting to put it into their portfolios. We've been putting it into our portfolios on offshore portfolios specifically for about 18 months, onshore portfolios, but we're talking tiny percentages. We're not speculators and that kind of thing, but we've been putting it in there as a new asset class, and it's done well for us at the end of the day. But it's just another form of currency. It just looks different, and it still needs time to build up that trust behind it. And then you get idiots like Dogecoin, right? Which was put together as a joke, and people think it's cryptocurrency, and it's valued through the roof, and it's worth nothing. That does the whole cryptocurrency arena a lot of damage to trust, because that's going to go south, and it's going to hurt people badly, and it's going to hurt the average Joe who doesn't know what they're doing. So I mean, part of the whole thing about any investment, doesn't matter if it's cryptocurrency, it doesn't matter if it's gold, if it's stocks, whatever it is. You shouldn't be investing in stuff that you don't understand. And, so part of my mission at the moment is to try and get the average investor to actually understand that, this is a new asset class. It's not going anywhere. It might be regulated and all the rest of it, but, it has a place in portfolios.
Thank you, Dawn. That's really interesting. I saw an article in the Wall Street Journal this week with Elon Musk with his Dogecoin, and he looked a bit like a priest, all these memes going on. And they actually said that Dogecoin is no laughing matter. We shouldn't assume that it's going to be worth nothing later. So that's the august Wall Street Journal. But coming back to that, welcome, Sean. Thanks for joining us. Sean is the founder and CEO of crypto investment platform Revix. And a lot of people are interested in Revix. We've had lots of questions coming through, Sean, ahead of the webinar this morning. Just for a bit of background, perhaps you could just tell us, you actually started Revix, didn't you?
I did indeed, and sorry for being late, Jackie. It appears that I have a tech firm with tech problems. I was battling to sort of connect to the webinar, but apologies for that. So yeah, in a nutshell, Revix has been around for 3 years. We recently raised $4 million. I mean, our total raise now is well over 7 million. And in a nutshell, what Revix does is we allow people to buy baskets of cryptocurrencies. So sort of different to going out and just picking individual cryptocurrencies. You get up in sort of the equivalent to a JSE top 40 or an S&P 500, but in the crypto space. And the main idea really behind that is to say, well, picking individual coins, certainly not Dogecoin, that's not included in any of our crypto bundles, but being able to own a diversified basket, it gives you exposure to, if you own a top 10 bundle, you own more than 85% of the crypto market. Doing that gives you diversified exposure that allows you to participate in the growth of this entire category rather than just individual coins. And I think that's an interesting point to really bring up in the crypto space. And Dawn, you mentioned this. It's that you've got certain cryptocurrencies that sort of blow up at different points in time. And it's, adoption is never just this nice diagonal line or vertical line or whatever. It kind of has stops and starts and all the rest. But as long as the industry is growing, that's sort of the growth that we believe that the average retail investor should be participating in. And that's really the idea behind the bundles, easy diversified exposure.
Thank you. And so just a bit more background. So Sean has a background in investment banking and has founded 3 startups, and he graduated magna cum laude with his Bachelor of Business Science in Finance. And Dawn also has a string of degrees behind her name, including an MBA. So these are people who spent a lot of time studying finance, and there's a lot of skepticism around cryptocurrencies, as Dawn touched on. There's a perception that this is just a big gambling, a big casino. Sean, do you think it's a big casino?
Yes, I do. I think that at the moment it is a big casino. Speculation, I mean, if you go back, I mean, look at the markets, right? I mean, financial markets in general are full of speculators, they're full of hedgers, they're full of, all these market participants. And if you're thinking about the stock market in, let's say, the early 2000s, late 90s, you had a lot of tech companies that were sort of coming out saying, we're building programs and software that's going to run on this internet thing. And people were going, what are you talking about? This is like super weird. Like how are you going to build a business around that? Fast forward to today, and every single business has the internet ingrained with everything that they do. And in 10 years' time, you're going to have exactly the same sort of outcome, but with blockchain as sort of the backbone. And I mean, blockchain technology, when the penny drops, you realize just how big it is and just really sort of the impact that it can have on society. So is it really a casino? Of course. I mean, you can see Dogecoin, you can see the speculation in the market. There's a reason that the volatility is where it is. However, we should not discount the fact that what's going on, the applications that are being built, and sort of the way that this market is occurring, and the brain drain that's happening from the financial sector and the tech sector. I mean, you've got really smart people entering the crypto space. And there's a reason for that. It's because there's this huge opportunity to fundamentally rewrite the way that society operates. All of a sudden, you don't work with just centralized institutions, you work with decentralized networks. And that fundamentally changes the way that you could interact with, whether it be tax authorities, whether it be land registries, you name it. And we're sort of at the starting point of that, which is really exciting. So is it a casino? Of course. There's a lot of sort of speculation around what will be successful, what won't. But at the end of the day, there is a fundamental use case behind a lot of these technologies.
Thank you, Sean. And speaking of tax, it's welcome to Jashwin Baijoo. Hi there, thanks for joining us. Jashwin is a tax expert, so he's going to be helping us with some of those challenges with cryptocurrency and your tax return. Before we go into some, Jashwin, it would be great to hear a bit more about your background and what you've been seeing the taxman do with cryptocurrencies.
Sure, thank you, Jackie. So firstly, in terms of a background, I am the legal manager for Africa Tax and Compliance here at Tax Consulting South Africa. Currently busy with my master's in tax law. And what we've seen in recent developments is that in terms of the taxation of cryptocurrency, firstly, it is a myth that there is no tax implication, because there definitely is. And secondly, it's very circumstantial, and that basically determines whether your crypto is taxed from a capital perspective and CGT is then applied to it, or whether it's from a revenue or income perspective, in which case the taxpayer is taxed at their nominal tax rate. And what we have seen is that, as I said, very circumstantial. For example, if a Bitcoin is purchased and it's held for a period of time and then disposed of, however, it's more of a once-off transaction, then it's more aligned with being capital in nature. Whereas if it's a 2, 3, maybe 4 trades in a short space of time and this is continuous, then it's more akin to a trade, and this is then considered a business and it's taxed as revenue. So it's very circumstantial, and each transaction must be considered both on its own and within the context of surrounding transactions, or in the event of being a single transaction, in the context of this was not the intention, because intention, as we're all aware, in any branch of law, intention is quite often a very pertinent factor in ascertaining how the treatment of a certain action or non-action is treated.
And so where is your tax? Where are you liable for the tax for the cryptocurrency? Because where are these cryptocurrencies based, or is it dependent on where you live, Jashwin?
Okay, so from a South African context, as you're aware, in South Africa, you're taxed on your worldwide income, and then we must also consider residency. So in that case, it's not actually relevant as to where these cryptocurrencies are based. However, based on circumstances surrounding this, for example, if you were offshore, let's say you're in the UAE, then the tax implications would be vastly different. What we can confirm, however, is that SARS's stance on this is, as a South African resident and as part of the South African tax base, regardless of where in the world your crypto asset is held, you are still liable and subject to taxation in South Africa.
But the reality is maybe some people are investing or buying crypto because they want to pay less tax or get their money offshore. We hear that crypto started life really as a currency for Mexican gangs, didn't we? Well, that's probably a fallacy.
That's I think that's something Sean is probably better equipped to answer. Sean, the origins of cryptocurrency. If you want to maybe give us a quick 2 minutes history lesson on crypto.
Sure. So, to my knowledge, the Mexican gangs were not that sophisticated. Maybe the Mexican gangs were Satoshi Nakamoto, right? Because essentially Satoshi, whether that was an individual or a group of people, he was the one, or they were the one that sort of put together the Bitcoin white paper and created the first. There was a digital currency before that, but the first cryptocurrency that we know today, and that's Bitcoin. Now, the origins are a little bit murky, right? We know that it started late 2009, when you're looking at sort of the financial collapse that happened after the big housing collapse in the US and the financial markets were in turmoil. And that was really when Bitcoin started. And if you think back to those days, you're looking at Bitcoin being worth less than 1 US cent. So you had people owning 20, 30, 40% of the entire Bitcoin network at some point in time. And over time, you started getting a bit more adoption. So it's difficult to sort of say, what's the origin story of Bitcoin? Because that's a part of the mystery behind Bitcoin in particular. It's that people don't really know how this came about. So there's conspiracy theories saying that the US government was behind it. There's conspiracy theories, I suppose, that Mexican drug cartels and all the rest are behind it as well. I mean, it has been used for nefarious activities in the past. We know about Silk Road. Silk Road was where essentially you could buy loads of drugs and a whole host of other bad activities online, and it was essentially outside of the normal web that we see today. And that was a really big news story when Silk Road was busted. If I'm not mistaken, that was in 2013, 2014. And yeah, that was a really big story in the world of crypto. Today, sure, I'm sure that there's people moving money offshore out of South Africa. I'm not going to act like people aren't using it to circumvent exchange controls and all the rest. But I think that's not necessarily a problem in the crypto space as much of a problem as it is for regulators actually not stepping up. If you're looking in Germany as an example, Singapore, a few other regions around the world, I mean, we're busy expanding into Germany and we're engaging with the regulator there. They are just light years ahead. They've got regulators that say, we understand how this technology works. We want to embrace it. There's a sandbox environment that allows you to communicate with the regulators what issues you have. And that's a sort of environment that you need more of in South Africa. We need the regulator to say to us, listen, this is how we can regulate cryptocurrencies. And that makes things safer for the individual. It allows SARS to make more money because all of a sudden us as crypto service platforms now have to report information to SARS. Maybe a lot of customers won't like that, but that could be a really good tax generation effort as well. So the regulators in South Africa really do need to step up.
So Sean, that brings me to a question from one of our attendees. He attends our webinars regularly, and he's also been a guest panelist previously, Derek. Derek says that, and he's a financial advisor, and he was really interested to hear from me. He says, when reading the disclaimer, it is obvious that Revix, like all the other providers, are not registered with the FSCA, as they are still planning to regulate this aspect of financial structures. Is that true or not?
Yeah, it's true. Unfortunately, in South Africa, you can't get regulated. You can't go to any particular regulatory body and say, listen, regulate us. Because, I mean, imagine selling oranges. Like, who do you go to if you're selling oranges? Like, I don't know, right? And it's the same with the crypto space. We've gone to, the Financial Services Board, regulate us. No, sorry, you're not a security, you don't sell securities. Okay, fantastic. You go to the commodities sort of regulatory bodies around that, import, export sort of controls and all the rest. Oh no, you're not, not offering commodities. So you need to define exactly what cryptocurrencies are, and that's a good starting point. And in South Africa, they've been saying for the last 3 years, there will be crypto regulation, there will be crypto regulation, and there just hasn't been anything. I was on Bloomberg about 3 weeks ago complaining about exactly this, because every customer that comes to us, they say, send us your FSB number. And we go, I'm sorry, we don't have an FSB number. That's 9 times out of 10 a lost customer, not because they don't want to get involved with crypto, but they're not going to use a platform that doesn't have some sort of registration number. So that's a really big hindrance in the industry. And I mean, we've all heard about Mirror Trading International and the huge, mess up that was. And again, whose fault is that? I'm pointing my finger, obviously, at Mirror Trading firstly, but secondly, at the regulators. Your job as a regulator is to protect customers and protect everyday people. Our job as a firm now is having to essentially fill the regulator's shoes and look after customer protection as well, and sort of, assume banking practices, which is not necessarily the best way to go about regulating crypto.
So you're trying very hard to be regulated and they're making it impossible.
Well, we're having to literally move over to Frankfurt to get regulated by German authorities.
Wow. And the second question that Derek asks is, they talk about following banking protocols, and this provides an impression that there is some form of security for the investor. Is there some form of security for the investor? Can you elaborate on that, Sean?
Yes, sure. So as a crypto exchange, you've got to sort of look at the different areas of risk. The one big area of risk is data privacy, because if somebody's able to hack into crypto exchanges, and this is something that's happened a lot, right? But they hack into a crypto exchange, they get all the usernames, email addresses, passwords, you name it, and then all of a sudden that information can be sold online or used online to access other accounts. So you need to make sure that you've got encrypted data. So that's something called AES 256-bit encryption, and this is something that has to be offered by crypto exchanges. So that's something that you should, as a consumer, go and look for and ask for security audits and all the rest when you're dealing with a cryptocurrency exchange. That's the first thing. The second thing, when you're talking about bank level protocols and bank level security, is you need to see, well, how are they actually custodying cryptocurrencies? Are they custodying it themselves? Which most times out of 10, I'm sorry to say this, means that a crypto exchange is actually just using a Trezor wallet, which looks like a little USB device that is held in a safe. And that's how they're custodying it, which is ridiculous. I mean, imagine somebody has to break in, hold a gun to somebody's head and take the cryptocurrencies. All of a sudden, you've got however many billion rand that a crypto exchange is holding, and that's been taken out the front door. So you have to make use of professional custodian partners. So there's the likes of BitGo. That's probably the biggest partner in the world. They professionally custody customer cryptocurrencies. And this is what you see in the traditional world as well, around securities and all the rest. You've got professional custodians that look after the cryptocurrencies, that provide insurance, that have the right sort of procedures, that if, let's say, me as the founder of Revix, let's say I was to die, that all of a sudden customer funds are still protected. And that's the really important thing as well, to make sure that you're using professional custodians.
That's really frightening. So somebody can walk away with all this Bitcoin on a little flash stick.
It's even more scary than that. People can actually remember. I mean, I don't have this sort of memory, so I'm not by any means saying that this would be me. But if somebody's able to remember the private key, you could essentially just walk away with it in your mind. You could get it tattooed on your body, right? And that's the truth, right? I mean, that's all you need to have access to a Bitcoin or any other cryptocurrency. It's just that private key.
Dawn, what are your thoughts on what Sean is telling us? You probably are aware of all of this because you've been really sort of immersing yourself in the world of cryptocurrencies.
I think one of the most interesting parts from a regulatory point of view, because as a financial planner, that is of prime interest to me, because with our offshore clients, because we can put them into Bitcoin because it's more regulated. But I think the one thing, and I think that Sean has alluded to it, is this perceived anonymity. And once it starts to get regulated, these trading platforms and this kind of thing need to know your client, right? So then it's no longer anonymous; it becomes pseudonymous. It's and that's how they bust into things like Silk Road and things like that. So those guys who in the dark web using Bitcoin don't have that completely anonymous protection that they had a few years ago. It's now know your client, and then and the thing is that not this know your client, because of the way blockchain is done, and whereas you have the one block and then somebody buys it, and all the data that is in the one block is now encased in the second block, and so on, so that the entire history of the transaction of that Bitcoin, you now have all the data there. It's like having every single statement, or having every single fingerprint for every single dollar that's been passed around to the country embedded, the DNA embedded in that. It's that powerful. So this losing a keys and or getting hacked and losing keys is a huge problem. I mean, we've all read of stories where people have put their keys on a hard drive and thrown their computer away, and now that's lost and gone forever. They spend their Sundays digging in the dump looking for that computer. So there are things like that, but for the the average man on the street, they need to have something along the lines that is protected and is with custodians and is probably regulated and that kind of thing. So that it almost acts like an ETF where they can actually get exposure to that idea in their portfolio, rather than, you know, physically holding the, you know, and having to have half a dozen different keys, and the keys are like this long, you know. So you know, it's much safer for the man in the street to actually, you know, start embracing the regulatory environment as it comes. You know, there is, you're starting to see it trickle in. You know, you've got something like EC10 where, you know, is in a sort of unit trust like environment, and so you can sort of start putting it into portfolios and that kind of thing. But, you know, actually, you know, sort of starting to put the naked crypto or something in there, you know, that we're still a little way off from a regulatory point of view.
So that's
Don't rush
Charles,
in with angels fear to trade, hey?
Yes, Charles actually said, why should we not just buy EC10 via Easy Equities? Dawn, is that the solution, or the other option?
That's what I use for my clients. You know,
Well, my job is actually to get you over to Revix, I think, by the end of this, and I can explain why in the session.
No, you're welcome to contact me. But, you know, the thing is that I'm in that kind of environment where, you know, I need, you know, I need to take advantage of as much regulation as I can, but still get exposure to the asset class. Basically, is what it is, and that's not buying Bitcoin. But,
Sean,
you know,
we have a lot of questions. Oh, sorry, Dawn. It's just based on what you said earlier about how risky it can be, and a lot of our attendees are asking questions about various cryptocurrency exchanges. How do you narrow your choices? What kind of questions should you ask to help increase your chances of ending up in the hands of a more ethical cryptocurrency trader?
Sure. So I would, first and foremost, and I think this is probably the easiest thing a lot of people can do, is to start small with an exchange. I mean, it's not very difficult with most exchanges or platforms like Revix. You can get started with 150 Rand, right? So start with a small amount, make a withdrawal, make sure that you can actually get your money back. I mean, you can trust me on this webinar. You can do as much research as you want, but at the end of the day, you sort of do have to, I think, try a platform out. Unfortunately, until there's regulation in place and all the rest, but go ahead and, you know, just do that. I think the second thing is go and look at ratings and reviews online. People are very good at actually providing information about exchanges, and look for independent ratings and reviews. So Google ratings and reviews are really good.
Reviews, sorry, can't people fudge reviews or buy them?
Sorry, do you mind repeating that?
There are a lot of scams with people buying reviews. You know, they're not really necessarily foolproof.
Oh no, most certainly. So I suppose looking at, let's say, I don't know, you know, Google, I suppose maybe you could fake ratings and reviews. At some point, I guess, you know, what sort of ratings and reviews are actually there? I mean, bots are good, but they're not that good just yet. Looking at maybe the likes of Trustpilot. Trustpilot prevents you from having falsified reviews. Actually, you know, vet the person that's leaving a review. That's really important. I think that's another area to look at. Where is the company incorporated? Ask for that information from the customer support team, and actually make sure that the customer support team can get back to you. I think this is another issue. It's all, you know, it's terrible to go to an exchange that is, you know, not a real exchange. It's also terrible to go to an exchange that doesn't get back to you within a reasonable amount of time. So, you know, if you ask a question, they can't answer it, or they have just terrible customer support, go somewhere else. So that's sort of something that we always push toward Revix. I think those are really the main areas. Find out who's behind the businesses. I mean, if you go search for somebody on LinkedIn and they're not there, probably don't invest in the business. I think it's that simple. Look for them on Facebook or one of the other channels. I think to me, that's sort of like the basics of what you should be doing. If you see a company with British Virgin Islands, Panama, any of the other sort of dodgy jurisdictions behind them, please don't touch them. Like, I think it's just really that simple as well.
Thank you. We've got a question here for you, Jashwin, so glad to have you back. Can SARS use the history of each Bitcoin to trace past ownership of Bitcoin, is the question from Etienne.
So it is possible. SARS is currently in the process of developing a unit that specifically focuses on high net worth individuals, all right, firstly. And secondly, SARS is also in the process of developing AI that can specifically trace transactions. So it is possible. Currently, I'm going to go with no, but in the next 3 to 5 years, there is a very strong possibility that the entire transaction history will be traceable. However, it must also be remembered that at this stage, SARS's stance on cryptocurrency is that taxation only takes place upon the disposal of the cryptocurrency. And it's at that stage that they look at the circumstances surrounding such disposal to ascertain whether it would be at a capital gains rate, in the sense that the cryptocurrency was held and thereafter disposed, or if it would be in the income aspect, and at which case it's taxed as at the nominal income tax rate of the respective taxpayer.
Joshua, I think there's another really good question that, you know, I know that a lot of people ask us, so therefore I think it'll be good to ask you as well. Is just around when exactly is the point of taxation? Is it when you go from, let's say, cryptocurrency to cryptocurrency, say Bitcoin to Ethereum and Ethereum back to Bitcoin, or is it when you actually go back into rands or back into dollars that the taxation event occurs?
So
Thanks.
very unfortunately,
David says,
Sean.
Jashwin, stars and AI, I'm laughing.
Yeah, Sean, unfortunately, it's both. So if you exchange crypto for crypto, that is a taxable event. And if you exchange crypto for any fiat currency across the world, it's also a taxable event. So they've really cast the net quite wide on this. And I think that that's more going back to, you know, Jackie's earlier point where a couple of years ago, 3 years ago, SARS said we will be implementing legislation on cryptocurrency, but they're still trying to work out the mechanics around that. So right now, their stance is anything and everything must be taxed. And, you know, furthermore, I think just from South African perspective, and also probably from an international perspective pertaining to other revenue authorities, due to COVID and the reduction in the tax base in most countries worldwide, I think that at this stage it's more a recuperation measure on the side of the revenue authority to just try and tax absolutely everything they can get their hands on, and, you know, just see what sticks.
Which makes Bitcoin more attractive, perhaps.
That's a yes and a no. From a taxation perspective, it's still going to be hit with the same tax, unfortunately. And whether it's crypto to crypto or crypto to fiat currency, as I did note earlier, the taxation of that is still going to stick. And ideally, if you are looking at a favorable tax position from the crypto perspective, then that position would be to have the circumstances surrounding your disposal such that the disposal is deemed a capital disposal. Whereas if you're continuing it as a business or a trade, then it's at your nominal tax rate. And in most cases, especially with crypto traders, that's not the lowest bracket of 18%, where it would tie in with the CGT rate, but quite likely a much higher percentage.
Thank you, Jashwin. Dawn, do you have any questions or comments to add to what Jashwin has mentioned there?
No, yeah, obviously it's a question that, I've been asking at the FPI. The FPI also very involved with trying to get this new asset regulated as well. It's not just, people like you, Sean. I think there are a lot of people out there wanting to get it regulated, especially after the mirror crash, where a lot of people lost a lot of money. But I think the one thing the one thing that we do come across, and I'm sure you do too, Sean, is there are traders who use arbitrage, and this was discussed on one of your radio shows a little while back. We were discussing it, and that is where they're not just doing day trading, but literally they're buying it offshore and bring it here because there's a margin that they can sell it at a higher price and make a profit. And that that kind of arbitrage is going to be very clearly marked as income, right? And in the income thing, the thing that I don't think SARS and everybody else has really come to grip with is that what if you use it instead of using a fiat currency, right? So you're not using it, you get Bitcoin to buy your next holiday to Japan, something like that, right? That is the other, we've been talking about, it being a store of value, but it has that transactional capability as well, which, and that transactional capability is what it was originally designed for, really, is to transfer money, not to invest it, not as a store of currency. And as and because it's instantaneous, and look, the bankers are not going to be happy with this, right? Because there are going to be lots of bankers out of work when this becomes mainstream. Because now you get money, it has to go in your bank, and your bank has to talk to somebody else's bank, and they have to check, and they take 2 days, and they sit and get interest on your money. When it's Bitcoin, it's like 10 seconds later it's done, and without all the middlemen and all their smart offices in Santon and their Porsches down in the basement, huh?
Dawn, you don't drive a Porsche, do you?
I don't.
No. Yeah, but I think just to add to Dawn's point there as well, I mean, this is a fundamentally new financial system. It completely circumvents a lot of the middlemen. I mean, that's why it was designed the way it's been designed. Currently, you cannot make a payment from one person to another, not a digital payment at least, right? You have to instruct your bank, which custodies your funds, to make a payment to another bank that then custodies somebody else's funds. There is quite a few different middlemen involved with that. If you throw in a credit card payment or something like that, then you're throwing in about another 7 to 12 different middlemen. Each of them are taking a very small fee. So this completely rewrites that structure. The other thing is cryptocurrencies aren't geographically focused, right? They're not built to ever be in any single jurisdiction. So now you've got this concept of, let's say, exchange control, of a government trying to prevent, or a central bank trying to prevent the outflows of funds. And well, now you've got currencies that aren't in any jurisdiction. So you don't have Bitcoin in South Africa, right? Like, where is the locality of Bitcoin? Because the private key only provides access to that Bitcoin. It's like having keys to your house. It means that you can get in the house, but if the house is digital, where does that exist? These are the questions that we're asking the tax authorities and the regulators. Just give us some indication of what you're thinking of, because without that, you're sort of scratching your head saying, well, it's the best guess as to how you should be taxing these, how you should be defining them in your assets and liabilities. So yeah, there's loads of unanswered questions, and I really do think that, and hopefully there's a regulator listening or something like that, but I really do hope that the regulators think about the opportunities in South Africa and the jobs and all the rest that can be created from this, because we are busy moving to, and not leaving South Africa, but we're having to go to other jurisdictions because people don't trust you as a platform without a regulatory license. And you can't market, right? You can't actually do social media marketing without having some sort of a license. So it's for us, it's critical that we actually end up getting that.
That's quite interesting. I see that Signia was going to try again to get a crypto ETF listed and had been rejected a few years ago. So it's almost like we're losing out on opportunities as a country.
Yeah, I think just on that note, I mean, maybe I'm going to be lighting some fires by saying this, but I mean,
okay,
phenomenal PR to announce an ETF in an industry that is not yet regulated. It just seems a little, I don't know, a little interesting to take that approach. But very good PR, well done on the PR front.
Okay, Dawn? Dawn isn't afraid of lighting fires. Okay, here's a question.
Yeah, that's usually my job, Sean.
Yeah, well, I didn't have to say anything. I just said it was great PR. I think that's enough.
Yeah.
So Arthur has a question, and obviously this is we touched on it at the beginning about, please tell us, where does the value come from for a Bitcoin? And this ties into another question where this attendee talks about how you see pictures of people in China on the news wandering around warehouses with computers and cables, and we hear about them solving maths problems, and then suddenly there's a Bitcoin in the world. Can you just explain this dynamic? What's actually going on, and why do we need all these people sitting in warehouses solving mathematical problems, Sean?
Sure. So Bitcoin uses something called proof of work. Proof of work means in order to create new Bitcoin, you're going to validate transactions, right? So a blockchain is essentially a block of transactions being connected to another block of transactions, which then creates the entire blockchain. So what these miners are doing really is that they're using processing power in order to validate. And I mean, I can get into how proof of work works and meme pools and all the rest, but in a nutshell, really, miners are using pretty complicated software and hardware to be able to solve mathematical problems to create new Bitcoin. That sounds super complicated. Really, all they're doing is trying to solve some randomized computerized program that is then going to connect two different blockchain or two different blocks in a blockchain together. Now, in order to do that, you need to have, generally speaking, pretty low cost electricity, which means that most of the miners are positioning themselves in China and other areas where there is just really low cost electricity, and the climate generally has to be right, because you need the temperature to be pretty cold, because again, these miners get really hot. So I think that's the one thing that's really important. This last weekend, I don't know if you saw this, but there was a power outage. So it's not just Africa going through power outages, but a power outage in Xinjiang, where I can't really pronounce the province's name. There we go. So yeah, Dawn said it now.
Dawn,
So,
I think you've been muted.
Yeah, load shedding.
Yeah, load shedding, 100%. The load shedding, I mean, that was a really big, that was actually the biggest drop in the Bitcoin hash rate power, or Bitcoin hashing power, which is essentially the strength of the network and how many miners are participating in this network. But, you know, kind of taking a step back, because everything I just said probably sounds a little confusing and people are like, what are you referring to? But in a nutshell, there's a new Bitcoin created, roughly speaking, every single 10 minutes, right? And that's like a new block being added to the blockchain every 10 minutes, and every single block produces 6.25 Bitcoin that gets given to miners. So that's quite a lot of money that gets given to miners with every single new block that's created. And yeah, I mean, that's really just, I guess, when you're seeing people walking around warehouses, miners are really big operations these days. You're looking at, you know, hundreds of millions of dollars being made every single month. And I mean, if you're looking at sort of the scale of some of these operations, I mean, some of them are listing on exchanges and all the rest. They were there before Coinbase. So there's a lot of money to be made in that space.
Thank you, Sean. Dawn, do you think that the Bitcoin actually has real value? And if not, does it matter?
Yes, you know, I think the one thing too, and just really sort of picking up what Sean was saying, is that there are a finite number of Bitcoin, right? And this is different from some of the other cryptocurrencies and things out there. It's only when you have a finite number that that you can get any kind of rarity, right? As long as it's infinite, you know, like Dogecoin, they no doubt it's infinite. They're producing hundreds of thousands a minute, you know, of that junk, right? So, but Bitcoin has got a maximum. I think it's 24 million. Is that right? 21 million, of which 18 million has already been mined, right? So there's only really a few million of these Bitcoin left to mine, and thereafter, you know, that's it. Okay, so there is this rarity in it, in the same way that you would happen with gold, you know, that there's not an infinite supply of gold. Well, maybe there is, but, you know, it has to be mined, and eventually it is going to run out, you know. And Bitcoin acts like a commodity from that perspective. I think the one thing that we haven't touched on that concerns me as a biologist or ecologist is that Bitcoin mining is environmentally unfriendly. It chews massive amounts of electricity, which is why they have to go into places where it's subsidized, like China, places where it's inherently cold. I think they do it up in the Iceland, I think, don't they, Sean? And they're also starting to use solar, and then it'll be an on again, off again. When the solar's running, they will, you know, run the Bitcoin when, you know, when at nighttime they won't, and vice versa. So there are Bitcoin miners who are trying to be sort of more creative in terms of finding the energy source. But for every Bitcoin that is mined, it becomes increasingly difficult. It requires more power and more power in order to do it. But but I think it's a long-term asset for a value in terms of investment. It is, you know, yeah, you get people who play around with it, but I think it was the first one there. It's got the most market share. People trust it more than, you know, some of the other, you know, laggards that have come along. You know, the other ones might just fall by the wayside. So I think Bitcoin and Ethereum and some of these others are going to be here to stay. But this, you know, the sort of impact on the environment doesn't, you know, it isn't great, eh?
Yeah, so Dawn, just to quickly jump in as well, Jackie,
sorry, Sean.
One thing that's quite interesting is you've seen Ethereum go through that Berlin upgrade that recently went through, right?
Yeah.
And essentially, this is a move, a very big move that Ethereum is making from proof of work, which is then using processing power to validate transactions, to proof of stake, saying, listen, if you own more of the network, so if you own, It's just call it 1% of the entire Ethereum network, and you have to stake those tokens. You say, listen, if we process a transaction and that transaction is false, you can actually take away all these tokens. So you have a vested interest in making sure that this network operates effectively. That mechanism uses far less computing power, and it is deemed to be, or seem to be, as efficient as a proof of work system. So that's something that you are seeing a lot of second and third generation cryptocurrencies sort of look at. Bitcoin is deemed to be a first generation cryptocurrency, Ethereum deemed to be a second generation, and then you've got the likes of Polkadot, Chainlink. These are looking at third generation blockchains and all the rest, which are more scalable, more efficient. They just don't really have the track record. And something that's quite interesting is we're part of the Berkeley Blockchain Accelerator, which has been absolutely phenomenal because you are working with some of the brightest minds in the blockchain space. And what was fascinating, and this is not financial advice, it's just a little insight from our experience there. Every single team that we are working with at that accelerator is building programs on Polkadot's blockchain. So Polkadot, Cardano are sort of looking to compete with Ethereum. And Polkadot now is a top 10 cryptocurrency, so it's included in our top 10 bundle. It's included in our smart contract bundle as well. But it's just incredible to see the amount of development happening on top of that blockchain. I mean, Ethereum sort of dominated that space for the last 2-3 years, or 2-3 years, 4, 5, 6, 7 years. Well, actually, until from 2017, before I get over myself. And now you're seeing Polkadot and Cardano seem to catch up, which is quite interesting.
That's a very interesting point you made, Sean, and this ties in with a question from Andy and quite a few other people, and I think this is the burning question. Most people predict that the bear market will only last for a few months. When the big dump comes, many of the cryptos will lose some value. So the question is it worth holding on to cryptos now or waiting to buy? So timing the market.
A million, billion, trillion dollar question. Honestly, I mean, no one can really answer that for you, right? Like, how long is a piece of string? Has the market increased a lot? Of course. But I think it's the same as talking about, let's say, the tech sector in the early 2000s or even today. Is the tech sector overvalued? I mean, sure, it's expensive relative to other sectors, but that doesn't necessarily mean that it's overvalued. It means that it has grown more than others. And I think if you're looking at the opportunity when it comes to investing in crypto, if you're looking at Bitcoin as an example, if you're looking at Ethereum, it's a little bit different. But let's say with Bitcoin, let's just say for argument's sake, it's only competing with gold for market share. And I mean, currently Bitcoin's sitting at about 8% of gold's total value, depending on how much you value gold at. But if Bitcoin isn't actually going to be something that overtakes gold value, well, you've got 10, 11, 12 times upside ahead of you here. And that's really then the big investment case. So it's great that it's gone up 7, 8x over the last 12, 16 months. But then looking forward, you could be looking at a significant multiple of that. So it's impossible, and I don't think anyone can actually come out. I mean, Dawn can probably add to this, but I don't think anyone can really come out and say that the market is too expensive now, or it's cheap, or it's a good time to get in, or a bad time to get in. I think you need to enter this market knowing that it is incredibly, incredibly volatile. You need to enter with an amount that you'd be willing to lose 50 or 80% of, because that's how this market can work. It can pull back quite sharply, but just that's the risk that you're taking for that massive return and the massive opportunity. And you probably need to dollar cost average into this market. So enter the market gradually over an extended period of time, rather than just coming in and trying to treat it like a casino and putting everything on black. So that's sort of our approach with this.
Dawn, is this a good bet for these retired people that we hear who need to turbocharge some returns because their SA investments are doing so badly?
Facepalm emoji. No. Retirees, as I said right in the beginning, don't invest in stuff you don't understand, right? So look, I know Andy. Andy's a friend of mine, and Andy is of similar age to me, and he's actually learning how to program in crypto. So there are retirees out there who are the exception, but this is for excess funds. This is for funds that are in excess of what you need for your retirement. Then you can do what you like. You can go and put it on black, or you can go and put it on Bitcoin. But you need to understand that there's a similar risk, quite frankly, putting it in Bitcoin as putting it in black. You can make, super returns, or you could lose it all, or you could lose a huge chunk of it, right? I think when it comes to, we've seen quite a lot of volatility in the market in the last few days. And I think the political environment in the States, specifically Biden's threat to double CGT, is playing into some of this downside, right? Because you're going to have the high net worth individuals that are holding Bitcoin. Maybe they bought it at 3,000, 9,000, somewhere around there. It's now sitting at 50,000. Their potential CGT bill is huge. So I think they're doing quite a lot of offloading from that perspective, maybe just to buy back into it, but rather take it at half the CGT than worry that Biden's going to double the CGT. Because look, he's Biden, you know, I mean, we've talked about Trump. I don't like Trump. I don't like the Republicans. You know, I really like what they're doing. He's a socialist. I don't. It's wonderful, isn't it? Right? And you know, but he's a socialist at heart, right? And so you know, all this money's going to the middle and lower class, but it has to be paid for. And you know, not unlike this country, not unlike SARS, they're going after the Lani-Os with long bucks, hey? And CGT is one way to do that.
Jashwin, a couple of questions before you disappear again. Etienne, I think this might be a bit of a facetious question. If I swap crypto for crypto, then can I pay SARS in crypto? Can you pay your tax bill in crypto, Jashwin?
Yeah, right.
Unfortunately, you know, it hasn't been developed to that extent. But I mean, to be fair, it would be a very efficient way to pay tax, as Dawn mentioned earlier, with no middleman, and you just immediately like, okay, SARS, scan my barcode.
Look, let's face it, SARS doesn't need middlemen. They just go in and take what they want anyway. You know that.
This is true. I mean, it's especially, I think over the last year, we've seen these third-party appointment notices. SARS instructs the bank, and next thing there's 100,000 missing from bank account. There's 200,000. It's insane, absolutely insane.
Usually on payday or the day before payday.
Yeah.
Just elaborate on that, so you don't know you're getting a tax bill and then suddenly SARS sucks it out of your bank account.
Or
yeah,
you
so, I mean,
are in dispute or something with them.
Yeah, so I mean, what we've actually been seeing is, so SARS sends out that final demand. Let's say you're owing $500,000 to the authority. You don't respond within the given 10 days, and without any prior notice to the taxpayer, SARS is then actually within its right to instruct your bank, be it a First National Bank, a Standard Bank, an ABSA, whatever bank it may be, to actually just send them a letter saying, okay, we require 100,000 or 200,000 to be taken directly out of the account holder's account and paid over to SARS. And I mean, we've had it. I've had calls with clients, and they literally tell me, last night I went to sleep, everything was fine. I woke up this morning and I'm missing 200,000 in my bank account. And immediately your first thought would be fraud, but it turns out it's actually just SARS, and that's because they consider that final demand as their formal notice of, you know what, any collection measure necessary may be implemented subsequent to a non-reply to this notice. And yeah, it's very real at this stage.
So Jashwin, for those who have joined us later in the show, is the legal manager for Africa Tax and Compliance at Tax Consulting South Africa. And Jashwin, we've got time for one more question for you, and that is, how can you minimize your tax when you are buying cryptocurrency? Give us 5 great points to cut down on that tax bill. For example, could you buy through a specific entity, or is it better to buy offshore? How would you do it? I think we've lost him. Are you there, Jashwin?
All right, so offshore is not the greatest option at this stage. Yes, I'm here.
Okay, sorry, the line broke up. Your best tips for helping us minimize our tax liability when we start investing in crypto.
So active, not reactive. Speak to a financial advisor, speak to a tax consultant, and
we can't hear you. Dawn, any broad brushstrokes tips for people who want to minimize their tax?
You know, for all my clients, this is a long-term asset. And if you hold it as a long-term asset, you're not going to get caught up as it being considered income, right? And CGT, effectively maximum 18% in an individual's hands, you know, is a much better prospect than getting nailed at 45% when it's declared income. And the best way to do that is to buy and hold and diversify within the asset class, you know, using EC10 and Sean's baby, right? to diversify. But you need, if you want to see the long-term growth, you can't use it like day trading. You need to buy it and hold it for some period of time, a couple of years maybe, and then sell it, and then it'll be considered CGT. And that's
I can suggest something else as well, by the way, which I think is quite interesting for somebody to explore if you'd like to explore this. And this is something I did 2 years ago. So let's say you've got a really big gain on a cryptocurrency like Bitcoin or Ethereum or whatever cryptocurrency it may be. What you could do is, instead of actually realizing that loss, and let's say you need some money, right, because that's the reason you'd like to make that sell, you can actually go and essentially borrow against that cryptocurrency position. So I'm sure everyone here has heard of decentralized finance. If you haven't heard of DeFi or decentralized finance, go read up about it. It's absolutely fascinating. But essentially what that allows you to do is to take out a loan against or collateralize your cryptocurrency. And then you could be taking out, let's say, a short position. And again, this is, it's not simple. So, do your homework before you go ahead and do this. But take out a short position or a futures short position that allows you to essentially net yourself out. So you've got a long position being that you hold, say, Bitcoin, where if its price goes up, your value of that asset increases. And then you take out a short position, which then does exactly the same thing, but in the opposite direction. So no matter what happens in the crypto market, you net it out. And then you can borrow against that position and essentially use that money. I can see, Jackie, your eyebrows are lifted. It's not simple, but it is definitely something you can do with very little tax implications as a result.
And before we close off here, Sean, do you see many people getting rich through cryptocurrencies, or do they hold on for too long?
Well, I mean, look at how the market's grown, right? I got to refer to one customer. Let's call him Phil. He's just an anonymous customer on the Revix platform, right? He invested with us when our bundles first launched, and we've been around now for 3 years. And his investment, he had a sizable investment. He was one of our early first big investors, but he invested about R1 million. Today, he's sitting with 16.2 million rand. And that is really the big opportunity, not just with cryptocurrency, but I mean, any asset. Let's say it's a startup, let's say it's other high risk assets. It's really that big upside potential, which has brought a lot of people to this asset class. And sure, it's high risk, and I think that's the other thing we must just reiterate as well. This is high risk. This can pull back 20, 50, 60, 70%, but then there's the upside opportunity, and it's called this asymmetric upside potential. But you potentially can make significant multiples on your investment, and that's, I guess, what people need to look at. So can you become rich from investing in crypto? Yes, but following Dawn's approach, take a longer term approach. If you want to go to the casino, go to the casino. The crypto market's probably not where you should be gambling.
And before we close off, Dawn, I know you said it's a long-term investment. Have you seen people enjoying some benefits from crypto as opposed to other assets?
Oh, absolutely. We've been using Bitcoin specifically in our clients' offshore portfolios now for nearly 2 years. So we bought into their portfolio, say, somewhere between sort of 3,000 and 9,000, and it's now sitting at 50. So at a time of a lot of turmoil and everything else, it has added some really nice growth into those portfolios. And we started off at 2% kind of thing, but we've let it grow, and we still think it is going to grow further. We may do some profit taking at some stage too, so we don't get asset concentration, we don't get too much Bitcoin in a portfolio. But yes, we've seen it. We've only just really started using EC10, so it's difficult to say. I haven't got sort of real experiences of anything major there.
Thank you. Well, thank you to all three of you for joining us today, and thank you for all our attendees for coming to the webinar. And if you've got more questions, please feel free to drop me a line at jackie@biznews.com. I see a lot of people are wanting to make contact with Sean, Dawn, and Jashwin. So if you send me an email, I'll pass your emails on to them. So thank you to Dawn Ridler of Coringa Wealth Ecology, an independent financial advisor, Sean Sanders, an entrepreneur in the cryptocurrency world, who launched Revix. And how would we describe Revix? It's not a cryptocurrency exchange, it's more a provider of bundles.
We're a digital broker. I mean, you can offer Bitcoin, Ethereum. You can actually buy digital gold on our platform. It's actually a physical gold bar that's held in a London Brinks vault, and you're just buying a portion of that ownership. It's like a share in a company, really. So yeah, in a nutshell, we're more of an investment brokerage than an exchange. We utilize exchanges.
Okay, thank you. And then Jashwin, you'll hopefully be able to help some people not have those large amounts of money sucked out of their bank account.
Yes, so that's correct. So once they've started with Dawn, gone to Sean, they can come here when it's time to dispose.
Okay, great. Well, thank you very much to everybody, and we'll see you
Thank you,
hopefully all
Jackie.
next week. Thank you.
Fantastic.
Bye.
Super.
Thank you
Thanks,
very
Jackie.
much.
everyone.
Bye.
Bye,
Yes.
everyone. Good long weekend.
You too.